Today, we're talking about the child tax credit for 2024. This topic is super important for families because it can mean significant savings come tax time, and I want to make sure you're getting all the benefits you deserve. Did you know that this credit can reduce your tax bill by up to $2,000 per qualifying child? That's right, it's a substantial amount that can make a real difference. So, what exactly is the child tax credit? Simply put, it's a federal tax benefit designed to provide financial support to families with dependent children under 17. For the 2024 tax filing season, this credit is still worth up to $2,000 per qualifying child, with up to $1,700 of that amount potentially refundable. Refundable means that even if you don't owe any taxes, you could still get money back. Now, let's break down who qualifies for this credit. To be eligible, both you and your child need to meet several criteria. First, your child must be under 17 at the end of the tax year. They can be your biological child, stepchild, foster child, sibling, or even a descendant like a grandchild, niece, or nephew. You also need to be able to claim them as a dependent, which means they can't file a joint tax return unless it's to claim a refund. And your child must live with you for more than half the year, although there are exceptions. You also need to provide more than half of their financial support. And, of course, they must be a U.S. citizen, national, or resident alien with a valid Social Security number. Lastly, there are income thresholds. If your modified adjusted gross income, MAGI, is above certain limits, the credit amount will start to decrease. Alright, so how do you claim this credit? You'll do this when you file your annual tax return using Form 1040 or 1040 SR. You'll also need to complete Schedule 8812, which helps calculate your credit amount. Most tax software will guide you through this process with simple questions. If your income is below a certain level, you might be eligible for free tax filing through the IRS Free File program. Now, what if you qualify for the child tax credit but your tax bill is smaller than the credit amount? This is where the additional child tax credit comes into play. This portion is refundable, meaning you could get some money back even if you don't owe any taxes. To claim this, you'll need to have at least $2,500 in earned income, which includes money from jobs or self-employment. It doesn't include income from things like dividends or pensions. If you're married and filing jointly, you can't exclude foreign earned income from your taxes. The IRS will calculate your additional credit by multiplying your earned income above $2,500 by 15%, or using the remaining credit amount you couldn't claim, whichever is less. For the 2023 tax year, the maximum refundable amount was $1,600 per qualifying child. This can get a bit complex, especially if you have 3 or more dependents, so it's good to check Schedule 8812 for the details. So, wondering when you'll get your refund if you claim this credit? By law, the IRS can't release refunds for returns claiming the additional child tax credit until mid-February each year. If you file early and choose direct deposit, you might see your refund by the end of February. Filing by paper usually takes longer, but the IRS's Where's My Refund tool can help you track your refund status. Now, let's talk about some recent updates. The Tax Relief for American Families and Workers Act of 2024 aimed to expand the child tax credit but has been stalled in the Senate. If it passes, it could temporarily increase the refundable amount to $1,900 in 2024 and $2,000 in 2025. The base credit, currently $2,000, would also adjust for inflation, potentially adding about $100 each year. To qualify for the refundable part of the credit in future years, you'll still need at least $2,500 in earned income. However, you could use your income from either the current year or the prior year to meet this requirement, which can be helpful if your earnings fluctuate. Let's also discuss what happens if there's an error on your tax return related to this credit. An error can delay your refund or result in the IRS denying the credit. If denied, you'll need to pay back any credit amount received in error, plus interest. You might also need to file Form 8862 before you can claim the credit again. Additionally, if the IRS determines your claim was erroneous, you could face a penalty of up to 20% of the credit amount. On top of the federal child tax credit, some states offer their own versions. For example, California, Colorado, and New York have state-level credits that you might be able to claim. Check your state's tax department website for details. Now, there's also a $500 credit for other dependents, known as the Credit for Other Dependents, ODC. If your child or relative doesn't meet the criteria for the child tax credit, but you can still claim them as a dependent, you might qualify for this non-refundable credit. The IRS has tools to help you determine if your dependent qualifies. It's also important to distinguish between the child tax credit and the child and dependent care credit. The former is for people with children, while the latter helps offset costs for working parents or caretakers, such as daycare or after-school programs. They have different rules and qualifications, so make sure you're claiming the right one for your situation. So there you have it, the child tax credit for 2024. I hope this helps you understand how you can maximize your tax benefits and get the support your family needs. If you have any questions, feel free to drop them in the comments. Thanks for watching.